Welcome home, Fabiana.
Thank you,
It's
Sandile.
good to see you.
It's great to be here,
Yeah,
as always.
Listen, I won't complain about the wind.
Please. You know the weather I come from.
Lovely. It's good to have you. It's always good to pick your brain. And we're hopefully going to get some decent thoughts and a conversation going. I mean, the last time we sat down for a recorded chat, I don't know if you remember, we were tossing up the odds of a recession. The specter of possible bank runs was all over us. And we had seen, global inflation cresting levels that we hadn't seen since the last century. And so, today is slightly different. The world feels like a good place. We've had all-time highs across a whole number of assets. So I guess, in opening, what are your opening thoughts about 2025, the year that surprised us all?
One thing that 2025 has taught us is that it's never either black or white.
Yeah.
And, it's not definitely a recession. It's not definitely equity markets will not do well.
Yeah.
It's not tariffs will definitely be bad. There's so many different components that go into what your investment strategy needs to be. I would say the biggest learning from the year has been the understanding that some of those safe havens that we were so convinced were safe and we had believed in them for so many years actually might just not be what we all thought.
Yeah.
And the truth is, that is not completely logical. Empires fall. They don't fall in 2 days or in one, but eventually they will fall.
That's a scary thought, that. I mean, the question of safe havens is quite an interesting one because you're seeing gold, which, we South Africans, so we know all about gold and we know how to get it out the ground. But it's behaving quite, like a risk asset these few months. And so, is that the new paradigm that, instead of people rushing to US Treasuries, we are now in a world of looking for alternatives?
I think that is the new paradigm. It's not a specific asset class, but is the investors' world's understanding that there is a need for diversification. And there's a search for it. And at some point is crypto assets, and it's no more. Then it's gold, and then it's no more. Yeah. It's assets outside of the US. It's other currencies. I mean, think about how well some emerging market currencies and EM bonds have done, including South Africa. So there is an understanding that we need to protect our portfolios by diversifying.
And I mean, the really interesting thing, I guess, from a global macro perspective is, despite the relatively muted delivery of, central bank monetary policy easing, assets are, at all-time highs. And so...
risk assets definitely are. And how many times we've heard strategists telling us that we had to sell equities because, they were so high in valuations or something was going to happen to macro. So first and foremost, macro doesn't really have a big bearing on how risk assets are going to perform, because the key driver of those risk assets are earnings. And if macro impacts earnings, then yes, it will have an effect on risk markets. But if it doesn't, as long as earnings are solid, perhaps because companies are selling in other countries than the ones where there are some economic issues, then equity markets and risk assets in general will be fine. And that's what we've seen this year. Earnings have stayed strong, particularly in certain areas that are more structural, if you want. And equity markets have done well. Risk markets overall, also if you look at high yield, have done well. The key is how will they do going forward? Yeah.
Before we go forward, I'm not going to ask you about NVIDIA, but...
You're the only one.
No wind, no NVIDIA. But I just want to, get your thoughts on, the, artificial intelligence. Our colleague, Dr. Michael Cook has banned me from using the word, so I do apologize. But, the whole theme around CapEx, building out data centers, building out, power stations to power those. I mean, how are you, and the team seeing this? We have a global listed infrastructure fund that clearly feeds into that theme. We also have the, thematic artificial intelligence theme fund. I mean, how are you guys, navigating this? I mean, are there things that we, as I would call us normies, are missing and, we should be paying attention to?
So, as you know, we have been, thick deep in artificial intelligence for a long time. We believe that it is a trend that is going to change the way we work and the way we live for the foreseeable future. The strength of artificial intelligence is in its pervasiveness. It can be everywhere and helping us with so many different areas in our lives and in our work. So we have started, as you remember, in 2019 with the strategy that is actually driven by an artificial intelligence brain, which has been very successful. And we also have a strategy that invests in artificial intelligence stocks. The key is to realize that artificial intelligence is not only the companies that build the infrastructure for that artificial intelligence, not only companies that make the chips, which, by the way, that doesn't mean that they're not great companies, but there is so much more, right? There are service providers that have IP built on artificial intelligence, but they actually don't need to build that much in terms of infrastructure. They're also beneficiaries. I mean, one of the greatest new, if you want, trends when you listen to company earnings is having company managements give you some clear numbers on the impact that the use of artificial intelligence is having on the costs, on their revenues, on the ability to reach clients. And so there are more ways to express that belief that artificial intelligence is going to be something really big for the future, for the foreseeable future, than not only buying semiconductors.
So, not buying GPUs. Great. Okay, let's look forward. I mean, you're a huge proponent of sustainability. We've seen the winds of change. Some, as you know, things go in cycles. People get excited. They lose some of that excitement. I mean, going forward, what's our take on sustainability? Do we still think it's central? It's a theme that, like artificial intelligence is here to stay and we need to reckon with it.
So from the very beginning, we took the decision of being pragmatic when it came to applying sustainability to an investment process. We have learned a lot from having a presence in South Africa. Yeah. We understand that some sources of power are necessary for the well-being of, less privileged areas of the population. So, for example, in our base Article 8 strategies, the usage nomenclature, we have allowed for hydrocarbons unless they have a very negative impact on biodiversity and nature. We have allowed for defense weapons because we felt that democracies need to defend themselves and need to defend their people. So we didn't have to make any change when, some new ways of thinking of sustainability emerged. And we actually welcomed a more open-minded view on sustainability. But sustainability is still important. I mean, climate change is here. Yeah. We know it is having also an economic impact on the companies we invest in. And so it is important we continue to take that into account when we analyze companies, when we think about the future. And for as much as we can, we should also contribute to a better world.
Yeah, agreed. We've, diverged a little bit from sort of normal market speak. So what was not surprising about the year that we've just traversed?
Possibly the fact that market velocity continues to increase. So we had already started to see the first signs of it, over the past year or so before 2025. But one of the changes that has been happening in markets is that some of the movements have become so incredibly rapid. So we've always been used to volatility, but now you have a new component of our investment process, and that's velocity. Yeah. Markets can literally move. Think about the E-mini moves, 2.5 trillion equivalent in market cap on April 7th, within a few minutes. So something is changing. There's more technology that goes into trading. There are many more quantitative strategies, systematic strategies that might have trigger points that trigger many of them at the same time. And also there's far more participation from shorter term investments. And so that is something that we have to continue to take into account when we invest. We have to realize that some of those movements can be very fast. So if we're interested in a company that perhaps has a big fall, we have to be ready with our research. We don't have time to do research later. We have to have a wish list.
Yeah, exactly.
And also we need to realize that noise can have very wide movements, but if we believe in fundamentals, we have to stick to what we know.
Yeah. And I mean, Fabiana, the thing that's really confused me, we've spoken about tariffs, but, we were all fearful of tariffs at the beginning. But the impact on markets certainly has been quite negligible. I mean, how do we make sense of that?
So a couple of things. The first one is possibly there was too much fear of tariffs at the very beginning. The starting point is always important, right? There was fear of tariffs. And then also some of the companies that had driven this market because of their earnings improvements are companies that are not necessarily being affected by tariffs in the first place. Think about technology companies, some services companies. But that doesn't mean the tariffs are not going to impact companies' P&Ls in the future. So if you think about U.S. tariffs at the end of 2024, it was probably at the average level of around 2%, just over 2%.
Yeah, that's about right.
We're now at over 15%, probably around 17% or so. And there's still a lot of uncertainty because we know that tariffs are probably the tool of choice of the U.S. administration. At the same time, there is obviously some expectations that there could be some judicial pushback against those tariffs. So we're still in a limbo. And to us, the way to invest at a time of uncertainty is focus on the fundamentals of the companies. Idiosyncratic risk is really the way to improve your returns. So look company by company if these companies are being affected by tariffs, what they're doing not to. And don't forget, some companies actually can be benefiting from the fact that other companies are being affected by tariffs. So there is a lot more to investing in just saying, tariffs are a bad thing. We're just going to get out of risk assets.
Excellent, Fabiana. Well, it's good to see M&G at the forefront of innovation as always. And once again, thank you for visiting with us. It's always good to have you. And if you want to stay longer, please just shout.
Oh, I love South Africa. You know that, Sandile, and I love to be here with the team, and I come as often as I can. So, yes, it is such a pleasure to be here.
It's an absolute pleasure having you. Thank you.